Welcome back to the StockTA podcast. I'm your host, Kevin Steuer. Today we have one of our favorite guests back on, Shad Marquitz from the KE Report. Shad, how you doing?
Doing good, Kevin. Great to be back with you again, and hopefully under better conditions than last time.
Yeah, so last time we did a show, the outlook for the precious metals, any of the commodities in general, this was in mid-June, was not good, and we kind of called it not being good at the time, and it could get worse. And we were right, and it's nice to be right. But I think now we're in a little bit of a different situation, and we've been trying to figure out when we should have one of these conversations. And I think stuff's starting to look up. So I'm excited to have Shad back on and share some of his thoughts.
Yeah, and we were actually sending emails back and forth over the last month or so, like, "Hey, do you want to do something?" I said, like, "It still looks pretty ugly to me. We got to wait for something where there's a turn." And I think finally, over the last week or two, we have seen that turn. I actually had an article out over the weekend called "Green Shoots in the Commodities," and I think we're finally seeing a little life in the sector and the sentiment picking back up. So.
Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
Hopefully under better conditions than last time.
Yeah, so last time we did a show, the outlook for the precious metals, any of the commodities in general, this was in mid-June, was not good, and we kind of called it not being good at the time, and it could get worse. And we were right, and it's nice to be right. But I think now we're in a little bit of a different situation, and we've been trying to figure out when we should have one of these conversations. And I think stuff's starting to look up. So I'm excited to have Shad back on and share some of his thoughts.
Yeah, and we were actually sending emails back and forth over the last month or so, like, "Hey, do you want to do something?" I said, like, "It still looks pretty ugly to me. We got to wait for something where there's a turn." And I think finally over the last week or two, we have seen that turn. I actually had an article out over the weekend called "Green Shoots in the Commodities," and I think we're finally seeing a little life in the sector and the sentiment picking back up. So.
Yeah, and I think gold's been leading the way. So if we want to start with gold, I mean, we've had some really nice price action on spot gold chart lately.
Well, if you look at the gold chart, couple key takeaways. This is a weekly chart, and if you look over here, I think it's important to drill in. We were below the 50 week, which is a big level institutions and algos use, really starting in May, and we finally just broke back above that. All right, and then if you look over here at the daily chart for gold, what's exciting is it's also above the 50-day moving average. So from a short-term basis, gold is back into a bullish situation. On a medium-term basis, it is. And so we're actually back in the zone again for the yellow metal. Any thoughts that you have, Kevin, on gold?
Yeah, I think we're both spot on earlier this summer. We both said we thought 4,000 would hold, and it did. And I mean, it's definitely broken out of its channel. If you drew a line from the top there, it's those last two candles are really a good sign. And I think gold has some room to run here.
Yeah, and it's nice to see that it's being echoed across the rest of the precious metal sector. Like if we look at the gold equities, you can see the painful progression down from the February high all the way down to the July lows. And so when we were recording the time before that, I think it was in June or maybe it was in late May, we were saying maybe we should have sold in May and gone away. And now we're actually seeing that we finally got this lift off. And I said, hey, before we come back on, let's make sure we get clearance. And look at this. This is the 50-week moving average, and then boom, a huge candle last week on the weekly to blast above it. And so far this week, as we record this, it's still earlier in the week. It's still holding above that, but that's enough distance there to make you feel like, okay, maybe that was the bottom in July. And it makes sense seasonally too. It makes sense that you would see this happen in the summer doldrums. It would happen in that slow summer months, people on vacation, they're at the lake, they're on a trip, they're not really paying attention. And every year, if you look at a 30-year average, there's a seasonal trough in either late June, early July. It just took a little longer this year, but usually there's a rally from late July, August into September where you kind of build out of it into a fall rally. So hopefully that's what we're seeing the early stages of here, hence the idea of green shoots.
We're recording this on it's Tuesday, August 11th, and tomorrow is CPI day, and everybody's watching that for the Fed decision. You got any worries about that with gold?
Not really, because we were talking about this on our show over at the KE report that when you think about the media narrative, it's that, hey, if gold sells off whenever there's a rate hike or whenever there's rate expectations, but if we were to back this chart up and like look back in time, it's probably too far to even back it up. But if we went back and we looked at 2016, that was a big year for the gold equities. And the reason it was a big year for the gold equities is because that's when gold bottomed at the end of 2015. And it was right into the very first Fed rate hikes. We can at least back this up to 2022. And I can show you back here. when we go back, maybe I'll go to the monthly just to keep it simpler here. You can see that in 2022 there was this false breakdown. It got down to 1680, and everybody was like, "Oh my God, it's the end of the world because we broke that support." And when that happened, that's when the Fed was about to start hiking rates. Well, look at what's happened in gold over the last few years, Kevin. Like that was during a rate hiking cycle. So if that can happen during a rate hiking cycle, some of the media noise around what's going to happen if Kevin Marsh hikes is a short-term blip. But actually, gold sells on the rumor ahead of time. It sells off before it, but then once the rate hikes are in, it buys the news and it kind of goes up. And so we can see that on the longer-term trend on this chart that like this whole time was a rate hiking cycle, and that didn't stop gold from basically tripling, and it didn't stop silver from going up even more dramatically. Like if you back silver up, look at that move that was happening during the rate hiking cycle for silver. So it's not something that I lose a lot of sleep over, but it is a media narrative that we have to deal with and contend with.
What do you think of silver here? Do you think it's going to catch up compared to gold, or do you think it's going to stay kind of, consolidate for a little longer?
Well, silver's always a laggard. It's always behind gold. Gold leads the chart, but even silver is barely getting up to its 50 week here. So it's encouraging that this week's above it. Last week it just barely got to it. You can barely see it, but it was like right on the line. So it's not as robust as gold. It has a lot more chart damage too from this big fall from grace where it got chopped in half. But silver has this propensity to springboard out of here. So it would not surprise me at all to see silver rip up into the 80s and 90s eventually in this move. But what we really need to do is kind of clear this level here in like that 68 to 70 level. There's a lot of chart congestion right here. So I want to see it kind of get above this level. And we're tapping on that right now. So if we could get back above a 70 handle on silver, I think we could really make some progress pretty quickly, maybe quicker than people expect on how quickly it could get up into the 80s and 90s again. But until then, at least it's encouraging that we're out of the danger zone. When we were down, the other thing I will highlight on here is if you remember, I think we talked about this over here to the side. This level here was 53.76, and this level here was 54.41. So that was the October and November peaks. I was really hoping that we weren't going to break that level, and thank goodness we didn't, because 54 is like right around here. But look how close we got to it. So we never really broke that lateral price support, and the fact that we're jumping up now gives me hope that maybe we got a little room in this for some rallying.
Funny, I've been waiting for 68 silver too before I've really bought this. I obviously own some silver and some miners, but I haven't had a high conviction in this breakout yet. But that 68 to 70 level is exactly what I've been looking for because I feel like if we can clear that, then there's a lot more room to run to the upside.
Well, and let's also have a look at the silver equities, Kevin, because when you look at the move in SIL, for example, it blasted above the 50-week moving average. And if we shift it over to the daily, you can see that it broke up above all the moving averages all in one swoop over the last couple of days. So nice to see such positive action in the silver stocks. And we could put in SILJ and probably a similar chart where you see this big blast here up out of it. So I'm encouraged that it wasn't just silver, it's also the silver stocks. And so I don't know what you think about silver equities here, but a lot of them were up 20% last week, which is a big move in the producers to go up 20% in a week. And I think last week the SILJ and SIL was up about 21%, and so was the GDX and GDXJ. Strangely enough, though, gold was only up 7% last week, and so the equities in gold leveraged it 3 to 1. But when you look at the silver equities, they only leveraged it 2 to 1. Do you take anything away from that?
I'm curious. I feel like silver has a lot more retail buyers, and I'm curious to see if just getting chopped in half this summer has momentum killer to it. But I feel like silver was talked a lot about on Reddit like this spring, earlier this summer, and I haven't seen it pick up that momentum yet. So I'm kind of curious to see if this is more institutional money moving it or if retail is going to hop on board at some of those levels we're talking about. Because I 100% agree with you. Silver is usually a laggard, but when it moves, it tends to move quicker. So I've been watching it closely because I'm really interested to see, where this next move goes.
Well, and I just think it's interesting that the gold stocks, like, I don't know if that it's as obvious on here as it would be if you were looking at like a ratio chart, but this move in the gold stocks and GDX was the same amount of strength as what happened in SIL or SILJ. It's both very big candles. It's just the underlying metal in gold wasn't moving as much as silver. So the fact that silver moved so much last week, you would have thought that the gold stocks would have been up 30%, for example. So I'm not complaining about double digits moves, but it's just interesting that the silver stocks maybe haven't quite caught up as much as the gold stocks. But it's probably worth also noting that another metal we talk about a lot, Dr. Copper, has just been ignoring everything, all the news, all the geopolitics, all the Fed expectations about Warsh and the rate hikes, and just blasting higher and higher. Now, some of that may be because of tariffs that the Trump administration may be putting on copper and people front loading it here in the US, but this has been going on a lot longer than just these recent concerns. If you look at this chart, this is a solid looking chart for copper here. And so I'm impressed by copper, and I'm also impressed by the copper equities, but the copper equities don't look as strong to me as the copper chart itself. So, what do you make of copper?
I went on a podcast about 2 months ago when I said they asked me which of the metals I like the best, and they asked between gold and silver. And I actually said copper, and I got a lot of flack for that comment. And I said, well, just because the copper metal does well doesn't necessarily equate to the copper miners doing well. And whether it's COPX or CPER, like that's been a great trade over the long run, but it's kind of been choppy here in the short term. So I'm really curious again with gold starting to take off if we get another. Is it going to be the metals piece that drives this, or is it going to be the AI data center need that drives this? Like, I think copper has a lot of things going for it, but I don't know which narrative kind of the media is going to run with and what that catalyst will be for the next move up.
Just from a technical basis, I'm encouraged that if you can see right here, COPX, the copper producers, bounced off the 50-week EMA like we would hope that they would. The wicks came down, hit it and reversed, came down, hit it, reversed, and it's bounced from there. It hasn't really been there since July of last year. So last summer, where it went down, briefly touched it, and then you can see what happened afterwards. So the more distance we can get above this 50-week, the better. We can shift it quickly to the daily, and we can see it is a mess. And to your point, it was a whipsaw, but it was going down and hitting the 200-day and going up, and then coming back down and hitting the 144-day, and then it's a mess. So sometimes that's where it helps investors to switch time frames and say, okay, that's a zoo. Let's go to the weekly, and then things kind of crystallize a little more clearly. Like, okay, I can kind of see that this is what institutional investors would be following. We can also quickly just work in COPJ. It's the same kind of idea, just the juniors. It's kind of like the GDXJ or the SILJ for copper stocks. It went down, hit the 50-week EMA, bounced, came down, hit it again, and now has bounced. So from that standpoint, the copper stocks are doing good. It's just, again, compared to the rip-roaring thing that is copper. And I think it's also important to point out for copper, and if you look at the copper weekly chart, you can see where, if we just dial it in here, copper's been making progress. But then if we go to the monthly chart, you can really see that in July, it was an all-time monthly high. That's significant. If any chart makes an all-time high, first of all, that's significant. But if you see a monthly high on a longer duration chart, that's very significant. And so far in August, off to the races again. But even if we reverse down and even if we had a red candle, the fact that you had such a strong move up where you had all-time highs in the monthly. I mean, if we back up the clock here, you can just see, look how far this was from all other highs here in the past. That is about as strong as a metals chart as you can expect for a base metal. And so I just feel like it's significant what happened on the monthly. It's significant what's happening on the weekly, and the fact that it's staying so strong and putting in new weekly highs. And then if you look at the all-time high here, it hit 68665. So basically 6.87, let's just call it that. Almost $7 a pound. I don't think anybody had $7 a pound on their bingo card for this year, but we're not far from it. We can actually hit it this year. So I just feel like that's another strong thing about the economy, about Dr. Copper, about how it's holding up, and how it's completely ignoring all of the macro news. It doesn't care about jobs reports. It doesn't care about Fed hikes. It doesn't care about the war in the Middle East. It has shrugged all of it off and kept blasting higher. So just another, I guess, check mark on the box for copper.
I think just the strength of it has been impressive, and especially like those two bigger red candles, if memory serves me right. I think those were both after tariff related tweets, and they bounced back.
Yeah, you're referencing the ones from last year where it's right
Yeah,
here.
yeah,
Yeah, that was where there was going to be a tariff on copper, and then it ended up being on copper pipes and fittings. And so it crashed all the way down to like 450 here. You know, it was like a $1 move in copper, but it built itself back up all over this time. So now the exact same scenario exists where we were supposed to have an answer by July. It was like right around here. We were supposed to find out, okay, are we getting this tariff on copper in the US? And nothing has happened so far. So it could be we have another big swan dive like that. But I think it's important that structurally, if we look back in time, copper's been ripping for years. And so even though that interrupted it, it hasn't stopped the trajectory higher. And again, when you look at what's happening this weekly chart, yeah, it shows up as an ugly moment from the past, but it's whipsawing higher and higher and higher. Now, maybe that won't last forever, and maybe it has the most room to crash. Like maybe it has the most room to fall back down and retest the 50 week again, but it's just strong action, and it's strong action in the stocks too. So just thought we'd note it.
Yeah, copper's an interesting one, and I just think any other metal, if you had that big a candle to the downside, I think the recovery would have taken a lot longer. Or tech stock, I think you can pick any stock. So I just think the relative strength of copper has been impressive. And to your point, nobody's been really talking about it, and I don't know many people had $7 copper on their bingo card. So I think it's
Yeah.
just a really underappreciated metal here.
Well, and let's talk about another underappreciated metal, the uranium stocks and uranium. It's just amazing to me that we have all these executive orders for increasing nuclear power. We have 38 countries that have committed to tripling their nuclear power by 2050. That's not that far away as far as if you think about what kind of infrastructure you'd have to do. A lot of new countries seeing what's happening in the Persian Gulf and what's happened with the Strait of Hormuz and saying maybe we shouldn't be totally reliant on fossil fuels. Maybe we should have some nuclear power. And then you look at the uranium sector and it's just been dead as a doornail. Although, just like everything else, we've seen a bounce coming into August, a strong bounce, but it's just up tapping on the 50 week. And so it still has work to do to get above that and get it back into a bullish posture. But right now, nobody cares about it. But you can see where the 144-day exponential moving average really offered a floor of support here for weeks in a row. And that's where it found support and it's bounced. Our hope is that if you're a uranium bull, that you get back up above this 50 week and then start running again. But talk about a dead sector. I still love uranium, and I actually like it more than most sectors for the end of this year, just for this reason that nobody cares about it. It's completely out of the papers and the media and out of the feeds for most people online. And I think it has the ability to surprise to the upside more than most other metals. What's your take at the StockTA crew for our uranium miners?
Our algo really loves URA. URM's not as strong a signal, but I think on this URM chart, I think it's really interesting. Similar to gold, like if you drew a diagonal line across, like it's starting to break out of that channel. And I'm wondering if we're going to have that big pop like gold had right after it breaks out of that downward channel.
Well, let's look at ERA too. It's a little bit different picture. It barely just did get above the moving average there, and it's a little bit stronger chart before it too. So it did hold up better. But even if we did URNJ for the juniors, you can see that it actually broke below the
Yep.
144 week support, and then it's going back up, but it's not as strong. I think URNM maybe because it has the physical, like the Sprott physical uranium trust in it, and maybe because it has things like yellow cake in it and the Kazatomprom for the Kazakhs. Maybe that's why it hasn't done as well as URA. But to your point, URA has kind of been a stronger ETF. I'll throw out one more just to keep it saucy here. NUKZ Nukes. This one has the small modular reactor stocks. It held up a lot better, but it broke below the 50 week and then got back above it. So it's probably sitting the prettiest of all of them, but you're basically taking on more exposure to the small modular reactor stocks, to utility companies like Constellation Energy, and a little less focus on the uranium miners themselves. But if you want uranium miners, I still think URNM is probably the best way to play the mining stocks, and maybe that could surprise more to the upside. So that's my thoughts on the U stocks.
Yeah. Again, uranium, nobody's talking about it right now, and that makes me like it more. Like when there's a lot of people talking about uranium and how much higher it's going to go, that's usually when I start trimming my position because I feel like the sentiment really goes from one extreme to the other more so than any other metal, I feel like.
Well, and another metal nobody was talking about this year until recently is lithium. Again, if we look at lithium, it went from $31 up to 91. So basically a triple from April. Remember the tariff tantrums? That was the tariff tantrum low all the way up to basically the very beginning of May, got up to 91.59. So quite a move for lithium, but then it fell out of bed like a lot of the critical minerals from May, June, and July, and it's now back above the 50 week. Struggling the last day or two, but I don't think anybody had lithium on even their radars because everybody thought it was left for dead. If we take this chart and we back it up to 5 years, you can see the epic run it had been on, but then it was crashing for years. And so you can't blame people for ignoring lithium. But look at that move from 2025 into 2026. I mean, epic, like we just talked about, a tripling in action. And that kind of came as a surprise to even most commodity bulls.
Yeah, and it was funny because I feel like the lithium narrative gets tied a lot more to Democrats and EVs, and it's done really well under Trump, and I don't think anybody would have expected that.
That's actually a great point because we heard, okay, now that Trump's coming in office, there's going to be less, but the people forget electric vehicles are a global market, and why they are not trending in the US, they are definitely trending in China and in Thailand and in Cambodia and a lot of the countries in Asia. They're kind of picking up some speed in Europe too, but I mean, there's a lot of drones being used in all this war, and guess what? They use lithium battery power too. There's also e-bikes everywhere. I live in Seattle, I don't know how it is in your town, but we have these little electric scooters everywhere. They're all being powered by lithium, so and they're all being charged. So it's amazing. In a year that everybody thought lithium would be worse off, it's blown people's minds, but even it sold off, just recently bounced. And then I'd make the point that same kind of effect in remix. Like if we look at the rare earths and strategic metals fund, again, this is not only rare earths. It's got rare earths. It has a lot of lithium in it. It's got antimony and tungsten and tantalum, all the defense metals, but it's done great, essentially tripled, more than tripled, came down and crashed right along the 200 day and 140, I mean, 200 week and 140 week EMAs. So that would be long term support. You really wouldn't want to see any sector break below the 200 week. I mean, think how long that is, 200 weeks. So the fact that it bounced, it's basically a 4 year level. So it bounced here and it's back up to where the 50 week is. We need to see it break above it. But every sector in the metal sector had a big week, the very first week of August, these huge big candles coming up. And again, if we shift it back over to the daily, look at how far it had crashed below it. You see kind of a crashing in the moving averages, how way down below it, now getting right back up to it. So after we cross over on the weekly, we really want to see these daily moving averages get repaired. We want to see the short term go back above the long term, and we want to see it put some distance between those levels. But when it's that messy, you again want to, as an investor, shift it back to the weekly, look at the longer term trends. And again, if you look at a longer term trend as far as years, and we back this up some, there was nothing happening until about that April tariff tantrum low. And then over the last year or so, rare earths are back on the menu, and scandium and niobium. We just had a big executive order from the U.S. announced the end of last week, and an announcement about all the money that they're putting into critical minerals, and it was all kinds of stuff: boron and niobium and scandium and all these crazy critical minerals that are back on the menu, and that's all it took to boost the sector again. So just a thought on the critical mineral space.
I'm curious if they're going to get a boost from all this calls for national defense spending, and we need more missiles, and we need like a lot of that stuff is critical components for that. So I think there's a lot of interesting just macro tailwinds from whether it's from Iran directly or the terrorist stuff. Like I think pick any of them, and I don't know. I think it was a little overextended once it went over $100 for the ETF, but I'm curious now if you look at that move we just had and all the reinvestment that we're going to be putting supposedly back into the defense sector, like what does this next leg up look like? Are we going to go to all-time highs in remix? Like I'm really curious to see this chart through the end of this year.
Yeah, and there's the whole restocking in the military, as you just point out. So if you want to make missiles, tanks, planes, aircraft carriers, all of those things,
Drones, a lot of
you
drones.
drones. And a lot of the guiding system for drones and the remote control systems and some of the laser systems need those specialty metals, and so that's why they're important. So even if it goes to drone warfare instead of tanks and planes, you're still going to need all these critical minerals. And so be curious to see what also happens in September when Xi from China visits Trump in the U.S. I believe they're going to have an accord, and we find out, does China finally loosen up on the export controls, or do they keep it as a bargaining stick and keep beating people over the head with it? So just another sector to keep tabs on. I guess we should also just briefly mention that oil has been a roller coaster. I think everybody knows why. It's mostly Strait of Hormuz and then the Red Sea lately, but it's just been a whipsaw. But when you look at the oil stocks, they've actually held up pretty good, all things considered. This is XLE, which is the big producers, and this is OIH, which is the oil services. We could pick other things, but what's your take on the oil equities versus the oil price?
I'm surprised how well the equities have held up, which worries me that they know the price is going to keep going higher. And, we saw the news come out last night that Iran's not not going to negotiate until 2029 and the strait's going to be closed. And then Besant came out last week and did some interviews saying the strait's going to be irrelevant and we're just going to build pipelines around everything. So I'm not saying we're going to have $200 crude oil, but I don't think we're going to go back into the 60s and 50s like Trump is hoping for.
No, and I'm just looking back in time here, like where we were at. Like we got up to basically 120 just in March when things really escalated for the first time, and then we made a little bit lower high here where we got up into like the 117 range. But we've been trending lower. But it would not surprise me to back this up and see oil substantially higher from where it was stuck. It was stuck down here in the 40s and 50s and 60s for so long that I think people just got used to it being in the 50s and 60s. And I think we're in a new normal. I think that new normal is quite a bit higher prices. And so I am concerned, like you said, Kevin, that we are going to have higher prices for longer, and that's going to hurt inflation, but it's also going to be a boost to energy stock. So I don't like making money off of tragedy, but I doubt they can build enough pipelines on land to make up for all those tanker ships not going through there. So there's going to be a squeeze in oil price. And if that's the case, people that are maybe holding in some of their oil stocks for the dividends could just hold on a little bit longer. The great part about the oil stocks is a lot of them pay 6, 8, 10%, even more than that dividends. So you kind of get paid to wait. Maybe that's why it held up better than other metals. Maybe there's just people camped out in dividend stocks, and that's why it's not pulling down.
Yeah, and I think the Berkshire Warren Buffett Occidental play, like that gets talked a lot about now, is how they bought that at lows. And I'm not saying he foresaw the Iran conflict coming, but I mean that's been a great stock. I own that, and that's been one of my favorites lately. But I think the other thing that hasn't been talked about recently is I think the floor for oil between China and the U.S. having to refill their SPRs. Like both of them are, I think I've read at like all-time lows. So where is that oil going to come from? And how is that going to lessen demand to lessen the price to lessen inflation, which is what Trump wants? Like, are we just not going to refill the SPR?
Well, and we supposedly have been sending the SPR reserves over to other countries, not even using it in the U.S. We've been bailing out smaller nations so that they didn't make a run on U.S. treasuries to try to fund their energy thing. We're like, hey, look, we'll ship you the oil, just don't sell the treasuries. Well, that game is over. We've been playing that game. This was supposed to last another week or two. Remember, like all these wars in the U.S. that when we get into these, hey, it'll be over in a week or two, but it isn't, and it's months and months later now. I mean, this has been dragging on for 4 or 5 months now. I don't know how many times we've had a negotiation with Iran, and then it's on again, off again. The SPRs are drained, and to your point, there's no cushion left, and there's no way to keep pulling it. So if you want to refill them, that's just going to create more demand that forces these even higher. So again, you want to be in the oil producers, and it's not a bad idea to consider the oil service stocks, which you were saying in your model is a little bit more beat up, and they are. They got away down to the 50-week moving average, but a little bit of a bounce ever since then. How are you looking at the oil services in particular, Kevin?
They don't have as strong a score. Like XOP is well liked by our algo. XLE is well liked, but I'm actually long crack CRAK, and that's the oil refineries, and that's been a great trade for me. And our I didn't know anything about it to be honest earlier this year, and my algo just picked it up, and it's that. I mean, that's been a great trade for us.
It's a beautiful looking chart, and that kind of gets into the crack spread in the oil for the refiners versus the crude. And so, yeah, I mean, all of these energy ETFs are a great way to play it. Of course, there's individual stocks in all of these sectors that we don't have time to get into, but for those people that just want to have a fishing pole in the water to play a trend, the reason we focus on these ETFs is just to at least have a basket of stocks to play. And this crack one looks like the best of the litter. So great pick, Kevin.
Yeah, no, sometimes it's good just to be lucky. Like if you're looking looking for oil, like there's a lot of different ways to play it, a lot of different companies, but I agree with you. I trade a lot of ETFs in a lot of different sectors just because one, I like the liquidity to get out if it does have a bad day. But it does diversify your risk because you own a basket of stuff instead of having all your eggs in one basket.
And people that like doing options, it's easy to do options on a big ETF. And again, you can always deconstruct these. You can always go into these. And, you mentioned XOP. We haven't shown a chart for that yet. So maybe we just wrap up with this idea on all to ETFs. So you could take XOP and invest in it. And that's basically kind of the small to mid cap oil and gas stocks. But you can go into the internet and dive in and say, what stocks are the heaviest weighted?
Yep.
What's making this thing up? How many stocks are in it? What, and then you can do a lot. So a lot of times I start my research on any sector by deconstructing ETFs. I'd recommend people listening try that out. pull up the GDXJ and look at what's in there. There's like 100 stocks in the GDXJ. Which ones get the most weighting? Why are they getting the most weighting? Should I own those individually? Could I beat the GDXJ if I allocated it differently? I'm always trying to beat the indexes when I construct portfolios. And so just an idea for people, deconstruct these ETFs and see if there's any individual stocks you like out of them.
No, 100% agree with that. I say that a lot on when I go on podcasts. Like, if I love a certain sector and I really want to press my bet, I do the same exact thing. Like, I really dig down and see. And in some ways, it's really easy to get a macro view on just what's going on in the market. Like, XLY owns a ton of Tesla, so I know if XLY
Mhm.
is going down, Tesla's probably going down. And I don't short stocks, but like back in the day when I did, like if I saw XLY break trend, like I knew Tesla was probably going to be shortly there behind it. So I just think it's a great way to get a top-down view before you go micro, because I think if you go the other way, like you said, there's over 100 stocks just in the GDX. So who has the time to go through every single one of those charts? Like that's a ton of work and probably not very efficient use of your time.
Yeah, I think GDX has about 60 and GDXJ has about like it had 91 at the end of the year, but I think it flexed up to like 115 stocks. And so I don't know that anybody has the time to research 115 stocks in GDXJ. The question is, why did the fund manager put that many in there? And which ones do they like the most and why? And so that's what I try. And the other thing is, to your point, if you like an individual company, but it's in one of those ETFs at a reasonable weighting, it may have good fundamental news, but if the sector is getting sold down and that ETF's getting sold down, that passive selling will swamp whatever fundamental news they have. So just another thing to be aware of. Um, and then I don't know if you want me to share kind of some of the different platforms to find us, but be happy
Yeah,
to go
yeah.
over that with
Please
you.
let us know where my listeners can find more about you.
Well, so I write on Excelsior Prosperity. It's free. I may eventually have a premium membership where I get into what's in my portfolio more, but I talk about a lot of trades on here. And just looking back, I was talking about silver producers, the uranium market. Peak summer doldrums was in mid-July, and that about nailed it. Rare earth stocks, mid-tier royalty companies, gold explorers and developers, and the most recent one from last weekend was green shoots in the commodities, and that's kind of what our theme was today. Also, my partner Corey and I record over at the KE Report, and we do interviews with companies and individuals, macro people. We get into the U.S. markets, we get into the commodities markets, and we also have a YouTube page. So come see us over at the KE Report. And so yeah, love to share ideas with your audience, and always fun to talk to you, Kevin. It's always fun to jump on here and just go around the horn and go through the commodity sector together.
Yeah, no, I love these. I learn a lot. I don't focus as much on the commodity sector as you do, so there's always something I pick up that I'm like, oh, I'm gonna write this down. I might trade this later. So thank you very much for coming on.
Hey, love to do it and looking forward to the next one.